What is going on, everybody? Welcome back to another live stream. So in case you missed the news, Bitcoin did cross over $70,000 across the weekend, across the move that happened Saturday, Sunday into Monday. So showing extremely good signs of strength, very good moves, and we will be covering that. But in case you're wondering, why is Bitcoin able to move from $60,000 just a couple of weeks ago to 71,000 and counting dollars today? You really want to understand two charts. These two charts are going to give you a very good insight into what's going on behind the scenes. It's not just the price and the daily movement that's happening in Bitcoin, but really the fundamentals, the shift and dynamic change that's happening behind the curtain, behind the scenes, which has very big implications for the overall moves that we see in Bitcoin. One is going to be the on-chain data, right? So the on-chain activity, this is what we're seeing right here. You got the price of Bitcoin, that's the black chart, and you've got this orange line, and you can see that they've kind of moved in different directions since the start of the year. So you got the price of Bitcoin has moved higher, crossing over 60,000. And this orange line, which represents the transfer volume. So that is how much movement we're seeing from storage onto exchanges like Coinbase, for example. And you're seeing a big discrepancy. You're seeing the two diverge away from each other. So price of Bitcoin is going higher, and the amount of Bitcoin that's being transferred from storage onto wallets has been dropping like a rock. Okay. So obviously that's telling you that what? It means that the market overall doesn't want to sell Bitcoin. The market overall has put a lot of their Bitcoin holding into long-term storage with a view for holding it for the long term and not selling for an extended period of time. If people wanted to sell, you would get a spike in transfer volume. So you would get a lot of the Bitcoin that's being held on storage come onto the exchanges like a Coinbase, for example, like a Kraken, in preparation for mass selling. Because we're not seeing that, we just don't have the available Bitcoin to see Bitcoin drop like a log, to see Bitcoin fall to low levels like 30,000, for example. So that's why it's very easy for Bitcoin to move to, drop 20%, hold that level, and then spike up very quickly like we've seen. The other thing you want to be aware of, which is given this support, which is given this stability, which is given this explosive moves to Bitcoin like we've seen over the weekend, is the fact that we got tons and tons of stablecoin on the exchanges. So people have loaded their exchanges, the Coinbase, the Krakens, with stablecoin. So taken their local currency, whatever it is, euro, dollar, pound, put it on the exchanges, converted it to stablecoin like USDC, USDT, in preparation to buy Bitcoin. So it's very easy for the market now to maintain floor levels, and very easy for the market to have these 5% jumps. That's just the dynamic. That's what's going on behind the scenes. I've covered that before, but it's a good reminder of why we're seeing a situation like we've seen over the weekend and into Monday, where we've seen a very strong move in Bitcoin. So it's currently standing 71,600 and some change. Now I will cover a little bit later in this live stream where Bitcoin will be going in the short term. So that is up until the halving event, which is taking place very soon, about 10 days away now. And then what's going to be happening after that halving event, and then what's going to be happening a little bit further into the future. Okay, so it's important you understand that so you're prepared for the moves that we're seeing in Bitcoin. But saying that, let's cover off some pretty critical news, some important updates regarding Bitcoin, and this will have a very big impact on where it will be going in the next 6 months, in the next 12 months, in the next 18 months, right? So the things that are happening now, things that are in the works, developments, things that are progressing, these are what are going to be the catalyst for the much larger moves that we're going to see in Bitcoin as we move through this bull run through this year and into next year. It's these types of events that are playing out now behind the scenes. So we've got just in 284 billion, so 284 billion China Sovereign Fund has reportedly applied to launch their own Bitcoin spot ETF via Hong Kong. So this is exactly what we've been saying. This is exactly what we've been speaking about for weeks and weeks. And that is a reminder that the Bitcoin spot ETF is very much in its infancy. It's very much still new. It's very much got a long way to go. Even though it seems like it's well established, even though it seems like it's made a very big impact and impression into the market, seems like it's very well integrated into the whole financial ecosystem, it's just a reminder it's still very, very early days for the spot ETFs. Because as I was saying to you guys, who is dominating the spot ETF space right now? Undoubtedly the US. Okay, the US has total domination over the spot ETFs. So that is who can access it, who can use it, where the money flows are coming from. It's all coming from the US. And remember, the spot ETFs were launched at the beginning of this year, and it basically just allowed a new pool of investors, a new pool of capital into Bitcoin that wasn't available. Okay, so pre-2024, we didn't have these spot ETFs. So pre-2024, we had the institutions and the boomers, which by the way, those are going to be the guys over 60 years old. Some of you might be over 60. And they control trillions and trillions, right? I think they have about 46 trillion in wealth. Don't quote me on that, but just from memory, I do think that boomers control 46 billion, something like that, trillion rather. So that's tons and tons of capital. Not saying all of that's going to go into Bitcoin, no, but a portion of that will. And before 2024, that was capital locked out. Now the tap's been open. Now we've got this new pool of investors. Institutions have access, the boomers have access. That's a lot of money, right? That's trillions of potential that can go into Bitcoin. And we're seeing that through the excitement, through the adoption, through the uptake of the ETFs. So where do we stand? Okay, so we know that we've got a couple of China funds, and I've mentioned a few of them last week or week before. A few of these Chinese funds have been applying to launch their own Bitcoin spot ETF in Hong Kong. So we want to think, right, where are we at right now with the ETFs and where are we going? Because where we are at right now is we have US domination. We have had about 15 billion of inflows come in. We've had BlackRock being the fastest ETF through its IBIT to get to 1 billion in AUM. These spot ETFs own 4-5% of the entire circulating supply of Bitcoin. And remember, that's important because the way that this new pool of capital is approaching Bitcoin is very different to how I would or how you would, right? Or how a lot of the current holders of Bitcoin approach it. We have a lot of people in Bitcoin who are still skeptics. We have a lot of people who are very quick to sell. But this new pool of capital is very different. They're patient capital. They are more informed capital. They are able to ride out fluctuations. Because of that, it gives a sticky element, right? That sticky element means that what you're doing is you're creating a supply shock here. With Bitcoin being a maximum of 21 million in circulation, you're creating a supply shock in itself by bringing this new pool of investors and capital in that want to stockpile Bitcoin, right? A portion of their holding is going to be locked away for years and years and years. You do that and you keep doing that and you keep doing that. What happens is you take more and more supply off the market. Through basic economics, if you are restricting supply, price will go up. So that's where we are at right now. US domination, tons and tons of inflows. They're still onboarding asset managers. I spoke to you about Morgan Stanley, about how they are coming on board, and UBS, and a lot of these diversified, massive integrated financial institutions aren't even in the game yet. They're not even in the game yet, but we have the ETFs have accumulated 5% of the entire circulating supply. So the US in itself isn't in its final form. The US still has a long way to go in terms of onboarding clients and receiving more and more money. They're not done yet where they're at. But what about the rest of the world? The rest of the world has pretty much been locked out of this spot ETF game. And the rest of the world is watching, for sure, which is why you're getting news like a 300 billion China fund that wants to get a piece of the action. Why would you not? Why would you not? Because they're charging fees on this. Okay, so it's in their incentive as well, because these vehicles, these asset managers that go and launch the ETFs, yes, they're getting paid, but then they're also getting capital from their domestic investors. So a lot of the world has been locked out of the ETF space. Pretty much the rest of the world has. All of Europe, the UK, China, most of Asia, the UAE, Australia. That's where it's going. So once the rest of the world can tap into the spot ETFs, once the investors, the institutions, the boomers from the rest of the world can tap in, you can very quickly see how we go from a situation where right now the ETFs hold 5% of the circulation to all of a sudden they're holding 10%, they're holding 12%, they're holding 15%. All of those money flows that come in is creating demand. So you're getting a demand shock. When China comes on board, you're going to see billions and billions of inflows, and you're going to see hundreds of thousands of Bitcoin being bought up. What does that do? That increases price. They're not going to sell, right? Because they're going to be holding this. They understand the cycles. They understand the low adoption right now, the low low global utilization for Bitcoin, which will increase. They're very clued up on this. So they're in the business of holding Bitcoin to get that true reward that comes cycles down the road. That in itself creates a supply shock. And we haven't even started talking about the Bitcoin halving yet. So then you can see a situation very quickly where in this present day where we are at, we have spot ETF dominance by the US and Bitcoin sitting at 71,000. Well, what happens when the rest of the world taps in? Well, that 71,000 very quickly moves much higher and surpasses 100,000 with ease, because now you have allowed the rest of the world access to these spot ETFs, which right now as we're speaking, they don't have. Most of the world is cut off from this, but the direction in which we are going, the rest of the world will soon tap in. That being said, you want to make sure you are involved. You want to make sure you have your accumulation plan. You want to make sure you have your positions and growing your positions before this happens. You don't want to get to a point where now China, Australia, Europe, UAE, the rest of South America, everywhere has spot ETFs. Bitcoin is now over 100,000. You remember it was 71,000 and you're kicking yourself that you've lost out, that you've missed out. You've got it again. You've got a Australian monochrome spot ETF expected to launch within 2 months. That was released just a couple of days ago. So again, ties in with exactly what we've been speaking about. Spot ETFs are very much in their infancy, even though it seems like they've been very well integrated into our financial ecosystem and they've been around for a long time. That's just because they've seen an explosion in demand and the uptake has been unprecedented. We haven't seen ETFs in history receive the level of inflows that these spot ETFs have been receiving. It's a big deal. It's a big deal at what's going on right now. So in terms of projections for the future, I told you, it's very easy to see a situation where ETFs are 5% right now. They own 5% of circulating supply of Bitcoin on behalf of the investors. What happens years down the line? Well, you've got JP Morgan expecting ETFs to receive 220 billion of inflows in the next 3 years. Remember I told you the ETFs have received net about 15 billion as of now. Years down the line, we're into hundreds of billions. That hundreds of billions is demand. Demand drives price. That's how you get cryptocurrency Bitcoin achieving a multi-six-figure price tag. If you compare it to where it's at right now at 71,000, it looks very cheap. Bitcoin at 250,000 looks very Bitcoin right now at 71,000 looks cheap to a 250,000 $250,000 Bitcoin. That's how it gets there. It gets there when we start allowing access to the rest of the world. It gets there when utilization increases. It gets there when it's more integrated into our daily lives, the apps that we use. We're not yet there, but that's where we're going. And we're moving with some pace. So you want to make sure that you are acting in your best interest, making moves right now that will inevitably lead to very lucrative outcomes in not that long. The bull run hasn't even started yet. 71,000, we're basically where we were at in 2021. We are basically still there. We're only a few thousand above that. That's nothing. We're going to get to a point and you'll see where we have these 8% moves in a day in the price of Bitcoin. It's coming. If we look at how the ETFs have performed week by week by week, you see continual strength. There were 2 weeks out of 13 weeks where there were net outflows. In the future, there will obviously be net outflows. It's not going to be green for eternity. But the trend is you're going to see way more green weeks than red weeks. And all of this is just explaining and showing the demand here. The more demand there is, the more price goes up. And remember, the rest of the world isn't even tapped in. This is basically just what the US is doing. When you get China, Europe, the UK, UAE, Australia, rest of South America all tapped in, this demand situation skyrockets. Let's talk about the price of Bitcoin, where it's going, what's happening. So it's definitely beat my expectation. I didn't think that we would see a 70,000 handle on Bitcoin until post-halving. So that's slightly changed what I expect to happen going into the halving event. I expect us to hover around the high 60s, the mid 60s, not do too much, and then create that shock drawdown event. I still believe that's coming, and I'll explain that in a minute. But pre-halving, things look a little bit different. Okay, so what's happened is I showed you this. This is one of these textbook chart setups that I don't advise anybody uses. But